Hi and welcome back to Cheeky Crypto. Today guys, we're going to be diving down into the charts, take another look at Bitcoin to see what's been going on most recently with BTC and what I think is going to happen next. Now as I get into this video, if you do find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you are going to be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, links in the description down below. Fantastic community talking crypto 24/7. We do a lot more technical analysis, lots more kind of polls and AMAs and things like that down in Discord, so why not go ahead and check it out. I don't think you're going to be disappointed by what you find down there. Right, let's jump right into Bitcoin here and see what's going on. So we're just paired up with USDT hourly chart. Binance is the data source, and this is all on TradingView if you wanted to replicate the charts. Now yesterday we saw this this impulsive move up. This is basically triggered the second that we went higher than the 1.618 on this third wave up here. Okay, so this actually was a good opportunity to understand what this meant. Okay, so rather than just being a corrective move where this was an A wave here with a B wave down and a C wave higher, this actually means that we effectively have a fourth wave down, which is usually, you know, quite complicated. For the most part, you'd kind of expect it to be just an ABC correction, but this one's gone a little bit deeper than that, and we'll talk about that in a moment. And then we get that final fifth wave higher before we end up with a standard ABC correction. So for the most part, you know, we were doing pretty well up until the top of wave 3. This particular wick actually took out a key technical area that we speak about yesterday, 42,600, basically meant that we were invalidating the low points of about $34,000. So effectively, it was a really good day to see that kind of get taken out. Now obviously in this corrective pattern, we bounced from the support of $42,000. Okay, we actually broke below it pretty much just a few hours ago, and now we're trying to confirm it as support again. Okay, and now the hourly stochastic RSI is just coming out of the oversold area. However, when we actually go up into the larger time frames, we've still got a bit of work to do on the 4-hourly stochastic RSI, the 8-hourly stochastic RSI, the daily stochastic, and the weekly, obviously there. So for the most part, what we've got here appears to be some kind of ABC correction. So if we actually go ahead and measure our A wave and move it over to the B wave, we can see that we've actually come down right into this 1-to-1 ratio. So exactly where you would expect to see a C wave. So if I remove that for a second, I'll show you what that means. This here being our A wave, this being our B, and this down here is our C wave. Okay, so we get this pretty standard zigzag pattern, standard correction, and now we can kind of think about where this fifth wave is going to go. Okay, so ultimately the minimum requirement here for this fifth wave is to go higher than this pink line, which comes in at about 43,378. And if we take a look at that on the wick here, that would be 43,361 to the penny. Okay, so that's just Binance data. So I'll just bring that down a little bit, right, somewhere around here. I'll leave it there, I'll do. So you get the idea, right? So we got to go up to at least this high here. Now, for the most part, and there's 3 real good key areas for this fifth wave: 1.236, 1.382, and 1.618. These 3 areas are ones that we want to watch out for. Okay, so $43,000, $44,000, and $44,500. And then likewise, you know, we could be talking about moving up into the 2.618, and maybe even towards the 3.618, but we would expect, you know, to be some volatility on that direction. It shouldn't just be straight lines up there. So for the most part, this structure is holding up so far, but let's talk about invalidation. What would prevent us moving up there any higher? And that would be going down lower than this pink line, 41,500. Let me just get that, $41,544. Okay, if we were to drop down lower than this line, it would invalidate this structure of impulsive move, right? So basically, as I said earlier, this being wave 1, 2, and 3, this actually would just become ABC, and then we end up with the ABC coming down, or maybe we go impulsive down, right? Something to that effect. So it's important that we understand that you know, our minimum kind of targets are up here for the fifth wave completing, and if we drop down lower than this low target of 41,544, effectively it's invalid, and we will not have this wave count. If I actually draw a proper arrow there, we will not have this play out a part of this wave count. Right? It would have to have a different wave count to take us up into those high points. So just worth noting, you know, what we are expecting. I am expecting push higher towards this fifth wave high, but if we were to drop down lower, it would invalidate it. Okay, so that's our short-term view here on Bitcoin. That's probably going to play out today, tomorrow, something like that, real short-time frame, and from there, we'll have to analyze what happens afterwards. Now, obviously, once you have 5 waves up, you have ABC correction. Okay, they always go that way. So once we have this completed, we'll be looking for some kind of corrective pattern to appear. It'll be ABC in nature. It might be short-lived, as in we just do something like that, or we might have something really big, like this, right? So we don't know until we get there, and we have to use other indicators to help us understand the depth of what is going on with that move. Now, as we come up into the larger time frames, you can kind of get a good idea of the structure. And of course, if we come up into our daily and we just bring this down, we're getting up in towards this range now where we're talking, about $45,000, which is this upper trend line, and whereas the lower trend line is about $35,000. Now, the target, or the main target that we have kind of scoped out here, is of course $47,500. Now, this is because of a couple of different things. One, we've got this move here, and we move it over to here, and this scopes out at about $47,500, and this would be a big A, B, C play. Okay, so you can see big ABC on the daily chart. So that's where we get to $47,000, but we also have a sub wave count in here as well. Okay, and if we measure this one from the high to the low, and we bring this down to the low that we've had here, we get $49,000. Okay, so again, this is A, B, C. Okay, so again, we're up towards that $50,000 range. So 47.5, 49,000, right? So somewhere in that range, right, is the kind of longer term play. After that, of course, potentially coming down. Now, both of those scenarios break us out of this triangular wedge that we're in. Okay, so whether we believe that, we are thinking about, some kind of correction pattern down to 20K or whatever, we have to understand that all of these wave counts are indicating a breakout of this trend line, or this triangular wedge that we're stuck in, this continuation pattern. And therefore, this would ruin the idea, or the structure of the breakdown from here into other areas. So though a lot of people are thinking that this is some kind of Elliott wave triangle, I'm not convinced on that in the slightest, because it doesn't really meet the requirements of an Elliott wave triangle, but it can be some kind of triangular wedge, some kind of continuation pattern, right? And the trend that led into that would be, down, and therefore the trend that exits would be down. So it is possible that we see it as that kind of pattern. Alternatively, of course, we could look at it slightly differently. And, actually what we've got is, if I grab hold of my thing here, we look at it from an A, B, C, D, E scenario. Again, doesn't really stick up to the structure that you would expect. So again, I'm not convinced that this is something that we're looking at. But this would actually have the breakout in the opposite direction based on the entry coming down first, right? So interesting kind of stuff, lots of theories around it, but I think ultimately this is just a coincidence to a degree, some kind of wedge pattern for sure, but it's not an Elliott wave triangle. It doesn't fit the wave B or the wave 4 scenario, unless of course we're talking about something really big on the weekly chart, for example, that we come down here, this is actually a wave B, and then we pull back down lower, but even then we don't necessarily meet the minimum requirements, in my opinion. So what we've got to do is we've got to see the breakout. If we hit 47.5K, essentially what we're doing is we're testing this resistance line, which is a natural kind of area for reversal, and then I think we'll pull back down a little bit. Don't know where that's going to go. Maybe that'll be 39,000, maybe it'll be 35,000. I don't know yet, but I do know there'll be some kind of pullback. It should be relatively severe, because we've got to lower the weekly stochastic RSI. Okay, it's moved far too fast for the little progress that it's had, and this reminds me very much of what happened over here. Okay, so this is basically December of 2019. We moved 63%, and we went from oversold to overbought on the weekly stochastic RSI. Okay, so this basically meant that we were moving this weekly stochastic RSI really fast to the upside without doing too much price discovery or recovery. And ultimately, this is what it reminds me of right now, right? We're moving this stochastic RSI far too fast, we're moving this up too fast, and eventually this is going to come down, and the stochastic RSI is going to come down, okay? So we don't know where it's going to go, but there is going to be some kind of correction in there. We can obviously speculate about super low prices or whatever. But after this, we got a good run, okay? And a really good run at that. Now, there is a difference here. And that is that when we actually take a look at where we were back in December of 2019, this monthly stochastic RSI was up here, right? It was actually in a midway point. Our monthly stochastic RSI right now is actually in the ground. It's completely oversold. So there are some differences between those two scenarios. And if we were to think that, we're only going to see 63% push, I think is actually quite naive. Well, I say naive. I think it's going to be a small push up, which we can kind of see is happening now. But I think the damage on the correction will be limited based on the monthly stochastic RSI. So we shouldn't drop down as far as we had done previously. Okay, and that was obviously in March. We had a pretty significant pullback in March 2020. Obviously, the pandemic crash and all that kind of stuff. So the movement of the stochastic RSI was fast, got us up into the overbought area. Then we crashed down hard. I think this time what we're going to do is we're going to move up, come up into the overbought area, and then we're going to pull back, not doing as much damage. Maybe we get the double bottom at 32k, and then we rally on hard to the upside, okay? And that's kind of what I'm thinking here, because the monthly stochastic RSI is not going to allow us to fall down too much further at this point, okay? We'd have to move that up first. So interesting stuff does lie ahead and slightly longer term views. But yeah, hopefully you guys, you have found this video useful and informative. If you have, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you are going to be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.